This is Brandon Steele. Welcome to Money Talks, a Mainsail Financial Group podcast series where we host industry experts and local professionals to really share some guidance, tips, and tricks into some of the areas that are a little outside of our day-to-day purview. Today, as you can tell, we are not in person as we have a very special guest, Heidi King, joining us virtually. Heidi is a member of the educational and partnership team at College Inside Track, and actually speaks a lot nationally, helps educate a lot of families around college searching, college education funding, and all topics involved. So Heidi, thank you so much for joining us here today to discuss education funding.
So thank you so much for having me, Brandon. I appreciate it.
Of course, yeah, really excited to get into this. I think especially lately, we were talking a little bit offline about changes in COVID and a lot of things that have really impacted things from start to finish on education funding. So really excited to kind of dig in today.
Perfect. Love it.
So maybe to start, just to kind of like set the framework for our conversation today, can you just talk a little bit about education costs? Like, we've all seen how quickly these things have risen. I'd just love to hear your take on what has happened and what you kind of expect as you look ahead there.
Sure. Yeah, it's interesting. We tend to take these in decades, the increases, right? So really since 1990, public flagship institutions, their tuition has increased over 200%, 213%. That is a startling number. Really, by all wisdom, it is increased more than just about any industry or any factor in our economy, something that's gone up that much. So affording college and the cost of them, it is truly something we're talking more about. There's public institutions and their increases. Private institutions have increased a little bit more. Their tuition has increased up over 400%. So typical college costs for flagship schools well exceed the $30,000 mark. And some of the noteworthy flagship schools that you might want to go to, outside of the states, like Colorado Boulder, going there from an out-of-state family, it's going to cost you $62,000. Should you want a private school like USC in California, $90,000. Just about those costs. So yep, it is. If you're thinking about a four-year education costing more than $200,000 times however many kids you have, it's actually the second largest purchase that you can make other than your family home.
Yeah, that's crazy. Then they seem to keep going. Do you expect that trend will continue, or are you seeing anything that kind of points to the idea that maybe some of those costs will start to maybe peak a little bit?
The one thing that we see is it is garnering more attention from so many more people. And so we would like to think that colleges will somehow curb their costs and their increases. But as of yet, it's certainly not legislative. We don't see that being something that's going to happen. So it has to be an institution by institution adjustment, but nothing necessarily unveiled as far as hoping to have it be better. Maybe at least slow down. That would be lovely.
Okay. Yeah, and maybe that's a good segue. Like, I'd love to hear your take on how COVID has impacted. One of the things that I thought was that with COVID, creating more, digital offerings and things like that maybe that would start to change things. But as you're mentioning, it has not. So what has COVID impacted as far as, potential costs, but also admissions and just kind of generally for secondary education?
Yeah, no, that's good. So COVID entered in a number of different ways. Yes, there are some positive opportunities that online learning is an opportunity for many kids to find classes that are actually not even at their institution where they're going to. My son, for one, goes to school in Indiana at their business school, but he was able to take a class at a community college not even nearby, right? So instead of a $4,000 class, he was able to take that for $900, right? That's because we found out just more about that, and more institutions are offering opportunities because of COVID.
Sure.
COVID made visiting a school much more easy because they really had to do a better job of highlighting their campus and their mission online. So a couple of positives right there. COVID also, however, made it people just were applying to schools like spaghetti on a wall, right? Because they can, and they didn't know how to necessarily narrow down their colleges. So with admissions, we're finding after COVID that where a family might have gotten away with applying to 8 schools, 10 schools, that because of the test optional landscape, we're finding kids applying, unfortunately, to upwards of 14, 16, and 20 schools, which is really not a great thing because it doesn't really increase your chances of getting into a highly selective school. It just makes you apply to more highly selective schools. And then I think the other thing that is noteworthy about COVID is that many of the schools are leaning into an early decision or an early action and taking more candidates that way. And so it's limiting the family's affordability, because if you decide to go and you commit to going and they take more kids at those selective schools because they're applying early and deciding more early, it's just increased the cost. So those factors are related directly to COVID.
And what is early? What does that mean exactly?
Good question. For different schools, early happens at a different time. Some of the California schools, they don't even have early. But many schools, November 1st is a typical early deadline. And that is early action rather than early decision. So you still have some flexibility, but earlier is better because it gives you a boost for admissions and it gives you a boost for your merit.
Okay. Interesting. Yeah, that is early.
Yeah, no, it is, considering that May 1st is actually the decision day.
Okay.
So if you have to apply to get in line for merit or get a better chance of getting direct admit to business, nursing, whatever program, computer science, it's early for you to get that accomplished if you think that you have till May 1st. It's just a new way of thinking and a new way of applying with more strategic opportunities.
Sure. Okay. Yeah, and to all of this, like to the underlying point in all of this, which is like basically more competitive, more expensive, you name it. I know one of the things that you talk a lot about is how to have these discussions and the different ways to approach things and things like that between families. So can you maybe talk a little bit about, different conversations that you typically help families with, especially when it comes to maybe like this, whether the kids have skin in the game and different ways to approach it from that angle?
Yeah, this is so important. And at College Inside Track, we work with families early in this process. Why? Because it is so important to come up with guardrails and ownership, and then really just a plan. And having a little bit more runway is one way that you guys at Mainsail Financial Group help as well. So we suggest a sit down during potentially sophomore year is a perfect time. We have a lot of runway there to adjust for what does college cost? Where are we looking at schools? Have we saved? And if we haven't saved enough, where's the gap? Right? So great conversations to have sophomore year. The continuum of, mom and dad have saved really well, we're going to pay for the whole thing, is wonderful if that's the family component and that's the financial structure. On the whole other end of the spectrum is, I paid for college myself and I want my child to do the same thing. And while I don't disagree that a ton of ownership, and that was something that we were able to do back in the day, it is very, very difficult to afford $30,000 on a student's budget. Quite often it is not even close. So the idea is we're really talking about the middle ground, right? Are we saying that the student needs to cover a third? or cover some portion? What is their ownership? And how do you really unpack their ownership? Are great conversations to have. Is it they're going to have a part-time job? Should that part-time job, have during campus time when they're in a semester, or just the summer? What is their ownership going to be? There's lots of opportunities for that. Their ownership could be the federal student loan that you get by filling out the FAFSA. And you only can get that loan. It is actually the best loan with the most advantageous terms. It is not a bad loan. It's only $5,500 your freshman year. So it's not really covering much of $30,000 if that's what your tuition, room, board, and fees are anyway. But for sure, if there's a gap, or for sure, if somebody needs ownership, frankly, because you're a little worried that college is fun and might be too fun. So if you need them to take a loan, that loan is going to be typically the best rates right now. It's at 4.99%, way better than the federal student plus loan, which is at 7.54%.
Sure. Okay.
Yeah.
Yeah.
So talk about that. That's a really good way to, like, how is the child contributing? How are the parents contributing? And that's how you break up the parts and pieces of paying for school.
That's great. And do you have any thoughts or suggestions on how parents can approach that conversation with their kids?
Yes. Well, getting everybody on the same page, talking about it earlier. The one thing that we see sometimes is the conversation of, well, we're just going to handle this, see how the search goes, have that conversation once we get in. Brandon, that is really a recipe for disaster.
Yeah.
Truly. Because we often end up applying to schools not having any idea what at the end of the day they're going to cost. Why? Because colleges don't necessarily want us to know what they're going to cost, because they don't really want us to take them off the list just for money.
Got it.
Right? So that's crazy, but that's their business hat. So we have to think about this with our own business hats on, have that conversation earlier, sophomore year, get on the same page, mom, dad, stakeholders. It really actually could be a grandparent or an aunt or an uncle who's going to help participate, which is wonderful. And your financial advisor.
Yeah.
Do you have a 529? Yes, no. What does that look like if you don't? And how do you still become strategic, as a sophomore family? That's okay. There's ways to make this manageable. The one thing that we don't want is to come up with massive, massive amounts of debt, because the average debt that we are carrying for one child is $58,000 per family, per student. So that's why it's so important to have these conversations to limit that debt.
Sure. Yeah. And I keep hearing a theme of address it early. So,
Yeah.
So let's start maybe for the folks who are able to address it early. And we don't need to spend a ton of time on this necessarily, but can you just kind of give a quick breakdown of some of the funding vehicles that are out there and some considerations for those who are getting ahead of, the education funding costs?
Yeah, well, I think the one that we hear the most would be the 529 plans, whether you have one that is most beneficial within your state, lean into that. Sometimes because the way they are initiated, there's also opportunities to be involved in 529s that are out of state. Brandon, I know you work with a lot of families in Washington state, but should it be a different state, just know that there are unique advantages state per state.
Yeah.
529s can be an advantage from when they're little, but they can also be an advantage even still with late stage college planning, which is a little bit more in that high school timeframe.
Sure. If I could, can I interject real quick? Just a quick thought on that. To your point, we typically do look at other states as well, because we do not have a state income tax here in Washington state. So you're exactly right. It allows us a little more flexibility in which state plan we may select as well.
Yeah. And so, we view that as one of the major ways to lean in. Yes, there are times when a life insurance policy or some sort of other savings vehicle can be set up for the beneficiary of the student or other strategic financial planning. There is the ability to cash flow college for families. Do know that college does not expect you to write a check August 1st, September 1st. You can actually break those payments up within a semester. And typically that's very, very inexpensive to do. And that just allows for a little bit more income generation. So you don't necessarily have to take a loan out. And then I would say at the end of the day, we are talking about federal loans for the student, for the parent, potentially private, or home equity lines of credit. Those are other opportunities.
Okay. Yeah. And especially for those folks who maybe are a little behind on the education funding or are starting to think about it more seriously in the sophomore years or wherever it may
Yep.
fall. Obviously, the loans are a great place to turn. So can you maybe just share a little bit more on that? Like, obviously, loans, there could be grants, scholarships. Can you talk a little bit about that side of the equation too?
Yeah, for sure. So paying for college, right? That's really what we're talking
Yeah.
about. You got two different buckets. You got the merit bucket, which anybody can get that. Doesn't matter what you make. You can make $1 million. You can get merit for schools. And when schools give out merit money, typically they give it in 4-year gifts. The other side of the bucket is the need-based bucket. And that is based primarily on the income of the family household. Different levels of that, federal need, but it really is actually difficult to qualify for that. So many families that work with financial advisors are not going to be in that segment. It's below like $60,000, you get the federal need, right? But so many schools use this FAFSA form that we fill out to give out scholarships that are institutional for themselves. That's why we really recommend taking the time. It's going to be simplified this year. Should be easier. It's going to go from 108 questions down to 40. Fill it out. It's usually in the fall. This year, it's the first year that it's simplified, so it's going to be slightly delayed, but that will give you the opportunity for the federal student loan. Then colleges offer parent plus loans. Those rates change every year, June 30th. So we'll know what the rates are going to be. Just know that typically it's a pretty good rate compared to the private space, meaning a bank or just some online source that you're looking for. Those would be the three. And then a HELOC. Sometimes people can dip into that if you already have it open. It might be another way to fund the gap.
Perfect. Yeah, that's super helpful. And just to kind of clarify, HELOC home equity line of credit. Some of our clients
Sorry.
will also have a securities line of credit. So I think that's a great option as well for those who are, playing catch up.
Yeah.
Real quick, I want to get, and maybe as we start to wrap up, I want to get your thoughts on something that may be a little controversial, which is the student loan debt forgiveness. So
Yep.
how, if at all, it's okay if not, are you factoring that into some of how you're approaching these funding conversations?
Yeah. So the loan forgiveness is a ship that is going to be in some turbulent waters for a while, right? We're going to find out what the Supreme Court should be in June, should be shortly, whether or not loan forgiveness will stay on pause. Are they going to address it? Do they find it constitutional? We will know more shortly. If in a sense that they don't eliminate it, there was an opportunity to apply for loan forgiveness for a certain amount of people, right? Not everybody was able to do every single loan, right? It's the federal student loan that was being able to be forgiven. So weighing in, that's kind of a tough one. I know that for a lot of people, it would be extremely impactful for them to get $10,000 off of what is a huge debt. I think the bigger picture for me is, how do we curb the costs? How do we reduce college? So yeah, we're in a bad situation with loans, but let's make sure that we solve what's going forward. I think that's the bigger conversation to have, because no one's listening to me about loan forgiveness anyway. I mean, yes, I have an opinion, but I want college to be more affordable for more families. And I know it is important. It is a milestone event. And I think that's a great conversation to also be having.
Sure. Okay. That's great perspective on things and a good way to kind of think about the bigger picture there too, and in the midst of all the political craziness. So that's
Yep.
all. Well, thanks so much, Heidi, for joining us today. I think that might be a good place to kind of wrap up here. But if anybody has any questions for you or wants to get in contact with you, is there a good place they can reach you?
Sure. Yeah, I am accessible easy on my email. It is hking at, then the name of my company is College Inside Track. So hking at collegeinsidetrack.com. That's a perfect way to get a hold of me. My phone number also is 630-687-0909. College Inside Track has been around for the better part of 16 years, helping families really navigate that college search, application, and acceptance process, and making sure that you find right fit schools.
Awesome. Thank you so much, Heidi. This was a really good conversation and kind of introduction into what to consider for families that are looking at education funding.
Yeah, thank you so much, Brandon, for
course.
having me. I really appreciate the opportunity. It's really fun. I love
Great.
the platform.
Good. Yeah, this was a fun conversation. And thank you guys all so much for joining us as well. If you have any questions for us directly, you can reach us at info@mainsailfg.com.